What is going on, everyone? Welcome back to another video, another day, another dollar, where we're going to be breaking down the ES futures contract on the 30-minute, and then we're going to update you guys a little bit on our daily, kind of give you guys more of a reference in that larger time frame. And then we'll also quickly look at the weekly time frame. As today was a lot different from yesterday. We took out yesterday's low. Rather, let me back it up here. Let me back it up a little bit. Let's go over what happened or has been happening over the last day. So yesterday on our 30-minute chart, we took out the previous day's high, right? We had been one time framing down 4 days in a row. Yesterday, we took out the previous day's high, putting ourselves back into an initial 3-day balance, right? We said our balance was 43.02 down to 42.13. Okay, that was our initial balance for our 30-minute or our daily time frames. And it looks like that's all they wanted to do yesterday, was put ourselves back into a balance, because today we opened up near the lower end of, or actually, right near the lower end of yesterday's price action, where we pushed down and then grinded back up. We opened right around that same area yesterday, and then we took out the daily low. So after establishing where that balance was, all we did was push up, put ourselves near, and got near what would be a balance high, and then rolled over and came down to test the other end of what is our balance. So we got down to 42.13.25, took it out and stretched that balance. So there's a couple of rules that come into play whenever you're looking at a balance. You get near balance, high or low, and don't take it out, roll over and visit the other side of that balance. You get near the balance, high or low, stretch it, and then come back in. And you don't go any further. So that means, you got to give it a little buffer, however you want to do it. And then the other rule is taking out a balance high or low, and then never looking back. So basically you break through it and you don't look back. Well, today is one of those examples of stretching a balance low, where after we took out the previous day's low, came back into that previous day's range and kind of rolled back over. Not a whole lot of acceptance established back in that area. That also happens to be last week's low, right around that 42.50 level. So getting rejected from 42.50 kind of. And another thing I want to point out is on that high volume node where I was taking longs yesterday against, today, guess what? When we pushed back up into it, we found that area as some type of resistance. So we broke below it, came back, retested it, and then got a drive lower all day long. So that just happens to be last week's low as well. So we're still attempting at an outside week down scenario where the weekly is, moving down lower in the bigger picture. So not only were we rejecting 52 or 42.50, we were rejecting last week's low, and then where we did all that volume yesterday to pump this market back up, all those buyers up here obviously puked it up today, got near the balance low, and then stretched it as we kind of just went sideways for the next several hour and a half, right? So because we couldn't get any more extension to the downside, and we really didn't hold trend on the way down, we kind of just one time frame down, and then after stretching that balance, came back in and didn't do anything but consolidate near this low between 42.13 and 4200 or 4203, where a low day was. I'm just going to say that the daily is now stretched, and then we only stretched a balance low. Area that I got involved in today was actually on a long. I probably would have been way better off looking for a short. But initially, early on in the day, after we took out the day's low, and then came back up, we tried to have a highest accepted price. We pushed down lower. We tried to have a set of single prints to the downside, but we came back in pretty good. almost visited the top, couldn't get the initial balance high, and then I finally got the initial balance low, right? The initial balance being the first two 30-minute time frames, high and low, usually whichever side you take out, is the way that the market is, trying to push, right? That's the stronger side of the market. So you definitely wanted to be on the sell side on that push back up. However, because we couldn't go trend, and putting things into context, like the daily being back to balance, I was looking more or less for, a fade of the extreme, right? And I was using this low here as my out, 42.13. Now, I was definitely going to take a bit of heat for this market to prove to me that they wanted to go trend, or at least go and test that balance low, and just show me how weak this market really was. So when we began to pull back and set that new low on the day, I actually took the long. I was long 42.24 and 42.25 to come back up to this point of control that we had established. So right here where I'm about to highlight, we had a point of control. I don't know if you guys can see that. Right there, I'll highlight it yellow for you guys so you can understand it. And point of control is just where we had the most amount of time frames traded back and forth through a price, right? So for 5 time frames, we traded back and forth through 42.35, 42.34, whatever you want to call it. And I was looking for price to rotate back up near that. Now, in F period, when we pulled back and set that new low in the day, we couldn't get back there. That kind of worried me a little bit, because that's what I was looking for initially on the fade when I bought that position, is I was looking for us to initially pull back, not get much extension, and then roll back in and get 6 wide up here, revisit. So a mean reversion type of trade to get back to that 42.34.50 level. And then seeing that we couldn't do that, I was looking, all right, maybe do we push back up at least in the next time frame to the previous high, because I was long lower, right? 42.24, 42.25, but I was trying to get the most bang for my buck because I was risking down to 42.13 on that trade. So I was like, if we pop up to 42.29, basically front run 42.30, which was the previous time frame's high, I was okay getting out of that position. So we eventually did pop back up to 42.29, and I got out of that trade for a really good, couple points. I think it was, $425 is what I made on the trade. But I was definitely worried. And even here, another nuance is whenever we did get up to that area and then take out the previous time frame's high, point of control had then been moved down, because we were 1, 2, 3, 4, 5, 6 wide right here around that 42.29 level. So point of control then gets moved down because it is closest to half back at that point. And it gets moved down, and then this starts to look like an afternoon rally higher, especially if you can't get back up to 42.34.50. So after popping F's high in G period and setting, that 42.31 high in G, we rolled over with a reversal bar, attempted to go trend, didn't do it, but that was definitely a telltale sign that this market was definitely going to go and at least test the low of day from Monday, which is our balance low. And guess what? In yesterday's video, I was discussing if we opened up inside the day's range and could not rotate higher to take out the day's high at 42, or take out the 42.80 level, basically, where all this resistance was, or where all this sell pressure was found over the last several days, this market would eventually roll over and look to visit that 42.13, especially if we took out, I was saying if we took out 42.36, there is a vacuum down to 42.13. And once we did take that out, guess what? This market just continued to push lower, and we eventually hit that target at 42.13.25. So I definitely would have been better off looking for a short on the push up versus my fade, but I was happy to get out of that trade, unscathed, and made money on it. Now, in each push up, you definitely could have been taking shorts on the pushes up, and then obviously here in all this chop, not so much. You could have taken a short here when we pushed up to 42.17 because we had single prints that filled at 42.17.25. We didn't quite get there. We got to 42.17 in that time frame. It eventually rolled over, visited the lows again. So, from 42.17 down to 42.04, you could have made some money on that trade. And then obviously on another push up, you could have taken the same trade, let it roll over. So shorts were very accommodating all day long today. So that's what you go out with today, to say the least. You go out with the high day, an afternoon rally high, and a new low of 42.0375, and getting closer and closer to that 4,200 level. You break below that 4,200 level, you have nothing on the downside until 41.78, right? I know there's nothing here on the chart to look at, but I'm just going to mark it 42 or 41.78 is going to be a target on the downside here, and we're just going to label that June low. Okay, so that is the next downside target, and we could easily get there if we have the exact same range as today. So say I take this whole range from today, right? I take today's range and I put it near a low. Guess what? We get to and through that area. Even if we take half of the day's range, we'll get down to that area. If we just take out the day's low, we'll get really near it, even if we did just half of the range. So now that is a target on the downside, right? If we take out 42.0375 tomorrow, the market will resume one time framing down on the daily and in our 30-minute time frames to go and target 4,200, obviously, and then target 41.78. Now on the upside, if we hold 42.03 and the 4,200 level, keep in mind earnings are coming out for a lot of these companies as of right now, this week and next week. So if we hold here and we can't take out the 4,200 level and we hold this balance low, we'll just rotate back up. You'll look to test 42.3175. Get above that, you'll look to test 42.5350. Above that, you'll look to go all the way back and test our balance high of 43.0225, right? Because obviously if you get this through this 42.50 level, you should have no issue taking out 42.80 and then eventually getting to 42 or 43.02. So I hope that all made sense. If you found that informational, please leave a like down below. Now let's go ahead and look at the weekly time frames. Just briefly look at the weekly so we can kind of show what that outside week down is attempting to do, especially breaking out of that weekly balance. So here is the weekly time frame. Okay, we had an outside week down last week, right? We got up to 42.23.25. The previous week's high was 44.23.25. The previous week's high was 44.19. We rolled all the way over, took out the other end of the balance at 42.51.25. And then this week we are seeing some type of continuation to the downside. Now we're in the hold zone where you would like to see buyers step into this market, is where change took place and where we had that previous balance area where we had a bunch of consolidation for a couple weeks and then finally broke out and got a big push to the upside. So you're in this hold zone where buyers, you definitely want to start to see, for the longer term, step into this market. Now for sellers, for us that are a little bit on the bearish side, obviously I'm probably in that camp, but I'm not letting my bias kind of sway my positions, obviously, because I took the long today. Anyway, I'm looking for us to not find acceptance back above 42.50 and get through 4,200 and go and test that weekly low of 41.74. Also, June's low of 41.78. So this was May's low the last week before June. This was May's low of from May 29th. So 41.74 on the weekly. For the monthly, it was June's low is next up, 41.78, because that's where June opened up. Anyway, no-go zone. You want to see, do we hold here for the buyers? Do we set new lows? But this is what the outside week down scenario is looking like. So if you get any acceptance back above 4250 area, you should at least find some type of consolidation, maybe between 4250, or stay within that consolidation on our daily time frame that we are seeing. Pull up our daily balance. We'll have to adjust it because we did stretch it today. But maybe see that consolidation between 4,300 and 4,200, which seems to be a pretty likely case. Volume was good today. Not massive, but not terrible also. So got to pat themselves on the back for the for the sellers. Did more volume than yesterday, did more volume than the previous day. So still above average volume that we are getting, which is good. We got decent range. But here is our balance low. Yesterday we had closed above the 200-day moving average. Today we closed below it. Like I said, 1, 2, even 3 days doesn't make a market. Thanks to Paul, I now know that. If you guys don't know who Paul Asmar Paul Asmar is, check him out. He is my mentor, and he runs a great trading room called Camelback Trading. I'll leave a link in the description below if you guys want to join. Anyway, this doesn't make a market, right? We're just chopping around that 200-day moving average. We are not finding acceptance above or below it yet. We need more market generated information to kind of determine that. And what that would look like is if we take out the low tomorrow and start one time framing down and get that 4178 daily low from June, right? So if we get that daily low from June, you'll go down and get that weekly low at 4174, right? That would be, that would show, okay, this market did not find acceptance above the 200-day moving average over the last several days. We found rejection. Now let's get on the short side and let's start targeting the rest of these lows. Not only will you target the rest of those lows, but there's a gap down here around the 4100 level that you would look to target, and then another gap if on the worst case scenario all these buyers give it up over the last several months, start to give it up, you'd look to target around the 4000 level, which is where that next gap is. Okay. Another thing I kind of want to show you is interesting. I want to show you what the 30-minute looks like within this range here. So this is the 30-minute chart. This is basically what we're reviewing at the beginning of the video, but I was using bars, obviously, instead of candlesticks. So you can see we're just clearly chopping around inside of this balance, right? Whole lot of chop. You're wanting to see, do we find acceptance above 4150 there, right? That's where you want to see if we find acceptance back above. If you do, then you go and target the other side of the range, which is 4300. If you do not, then you look to make new lows. Simple as that. So I'm going to leave you guys on that note. I know this was an 18-minute long video. If any of you made it to the end of the video, please leave a like down below. I hope you all had a wonderful day. We'll catch you guys in the next one. See ya.